much certainty does this bring investors now that the page is turned at really what's been a historic quantitative investment fund on Wall Street?
Yes, this is a giant fund, $60 billion firm, quant pioneer, and this is the biggest management change in its 23-year history. So it does bring a pretty significant move, especially given the history of these two founders that have been feuding for many years. So new two co-CEOs, providing perhaps more stability, more assurance to investors that the people at the very top can collaborate and work together.
It was interesting to see this, of course, on the week where the Oasis news came out, that they're reuniting, but now you have these two founders splitting apart. Before we move on to who the actual new CEOs are, what were they disagreeing over so passionately that it had to be disclosed in regulatory filings?
Precisely. A very strange move for any hedge fund, let alone 2 Sigma, which is known for being quite secretive, to disclose in a regulatory filing that the disagreements between their two co-founders was a material risk. So they were disagreeing over things like the organizational structure, succession planning, the roles of senior executives at the firm. It got to such a point that employees struggled to implement initiatives. It impacted or could impact the ability to retain talent.
You know, one thing that's interesting was the choice of the new CEOs. We were talking about that transition. One is somebody who's been there for more than a decade, Carter Lyons. I remember interviewing him a couple years ago at Milken. He was someone they put in front of an audience, certainly. Scott Hoffman, the general counsel of Lazard for decades, a lawyer being named a co-CEO. What does this say about their direction moving forward?
Yes, it's interesting. One person internal as a veteran, one person external to the firm, also a veteran, 30 years at Lazard. So, you know, it suggests perhaps they're looking for a little bit of new blood with a new voice externally. They want to keep some internal tenure and talent, and that they have two people sharing the role similar to the two CEOs that were previously there.
And it's interesting, you take a look at 2 Sigma's absolute return enhanced fund gaining 10.6% in the first half of the year. The flagship fund returned 6.1%. So not too bad, maybe not exactly beating the S&P 500, but how much of a distraction had this feud become? How much was it actually impacting the day-to-day over at 2 Sigma?
So that's what's really interesting, is that the performance is not bad, and it hasn't really impacted redemptions. So investors may not be thrilled with the fact that the two CEOs don't get along, but it hasn't impacted them such to the point where they would ask for their cash back. And that may be because a firm like this versus a single strategy fundamental equities shop. This type of firm with a quant pioneer is almost, it can run kind of on its own. It's very quantitative. It doesn't rely so much necessarily on like one PM at the very, very top.